Welcome to another episode of Tax Leaders Unplugged. Our guest today is Antonio Erbolato, and Antonio was working at Kraft Heinz for the last 10 years, most recently in the role of Global Senior Director in the tax team. And before, he worked at BP, Oracle, International Paper, and Deloitte. And today, Antonio is based in the Netherlands, but he was working in Brazil and the US in the past. Today, we will explain the concept of a tax control tower, the value it brings to your organization, and how to get one in place. Antonio, thanks for being with us.
Thank you. My pleasure.
What would you say are the biggest tax differences that you have experienced working in all those countries? Like, what are the things that stand most out from a tax perspective?
From the tax perspective, one thing that I could see that is really different, if you compare the Brazil tax environment, I don't know why, but the tax authorities there, they always think that the taxpayer is doing something wrong. So they are really, trying to find something that was wrong, or at least like 9 years ago when I was there, that was the situation. So the discussions with the tax authorities, they were kind of really different.
Mm-hmm.
If you think about Netherlands, it's totally different because the tax authorities here, at least the experiences that I had, they were really open. They were trying to understand what we were doing. They really saw the value of everything. So it was a relationship with more trust, if I can say like that. So I believe here the principle is that you are doing something right and you need to have some support. I could not say the same from Brazil, at least, a couple of years ago.
And so obviously, when I think about Brazil, indeed, controversy is one of the first things that comes into my mind. Is that what you are saying? Like that you have to deal with so much more questions from the tax authorities, tax inspections, audits, where compared to the Netherlands, the first thing that comes to mind in my case is horizontal monitoring, cooperative compliance, which is exactly as you described, like you build a relationship of trust. And then when that relationship of trust is there, of course, it comes with a lot of conditions, and it's not always as straightforward and beautiful as it sounds here. But if it is in place, then at least you have a more open relationship, less questions. Typically some way in which you update each other on events that happened. But explain us a bit like how you dealt with controversy in the Brazilian context and the high volume of it, and how you then evolved into more the Dutch scene, with then maybe the US in between, obviously, the country which probably is somewhere in between those two ends of the range.
Okay. Yeah, like I said, Brazil, I mean, I remember 10 years ago, or even when I talked to my colleagues, Brazil is a place where they have different type of taxes, like at the federal, at the state, at the municipal level. So we have more than, I don't know, 12 types of taxes over there. The legislation is always changing. So first of all, it's not so easy to keep updated on everything that is happening over there or all the new laws that are coming. And on top of that, the tax authorities there, they used to have a different interpretation from the taxpayers. And in most of the cases, their interpretation would give the taxpayers paying, or will end up getting the taxpayers paying more taxes than they believe it was right. So for me, that is the one of the reasons for having this kind of tax controversy environment. I remember from the companies that I used to work for over there, we used to have more than 100 cases, sometimes 200. And if you ask the tax colleagues or the tax folks over there, the situation is the same. And that is totally different from US and totally different from Netherlands, because when I ask my colleagues here, sometimes they have one or two or three discussions. And when I say that I used to deal with more than 100, sometimes they say, how is that possible? But this is the reality. The tax law in Brazil is changing. They are going through a tax reform over there. I hope that is going to change, but nobody knows, right?
Yeah.
Probably, if they are not able to really simplify the taxation in Brazil, the discussions will keep at the same level that we used to have a couple of years ago.
Yeah. And so for most multinationals, Brazil at a certain point in time will become one of their important markets, or at least a market, if not an important market. What would you recommend to the tax people in the audience here, the in-house tax people that one day may enter the Brazilian market, on how to prepare for the complexity and maybe the high volume of controversy that they might be seeing or facing, any hands-on advice that you want to give or recommendations? Like, these are things that you definitely need to do if you go for the first time to Brazil, tax-wise, so to say?
I would say the most important from my perspective is to make sure that you have a strong documentation in place to sustain all the tax planning opportunities or the decisions that you took, because some discussions in Brazil, they take more than 10 years. I was catching up with a friend of mine last week, and he was telling me that, he is being part of a discussion of goodwill from an acquisition that happened like 12 years ago. And the company is totally different. It was an acquisition, and he was basically saying probably we are going to lose the discussion because we don't have the documents to support the situation. So my advice is, like, for all the big transactions or even for the medium transactions, make sure that you are able to get the documentation to sustain the opportunity, and also make sure that you have like a global or a central place where you are retaining those documents, because, like I said, the companies will have new tax professionals over there. It's going to be a different company. It's going to be a different transaction. And in 5 or 10 years from now, I don't think it will be easy to find out all the documents that you need, especially for the big discussions with the tax authorities, where nowadays they are really asking for documentation, for support, for business reason, and for this type of, out of the tax requests, I would say.
And can you manage Brazilian tax affairs without having local tax boots on the ground?
If you are a small company, a really small company, my answer is yes. If you are growing, you need to have some local tax folks over there supporting you.
And do you think that, in general, maybe a last question there, the finance community has a decent level of understanding of the tax regulations, or would you really recommend like having dedicated tax people? Can it be finance people that have solid understanding of at least the basics of compliance and whatnot, or would you recommend to really go for more experienced tax people on the ground in your team?
I would go for more experienced tax people. I know some CFOs in Brazil that they have a good understanding about taxes because they need to have. It's really complex, but they always need the support from a tax professional with a couple of years of experience, and in some cases more than one, right? Because we have the direct taxes, the indirect taxes. Right now, transfer pricing in Brazil was changing a lot, so it's a new land of opportunity over there, or a land of issues for for the coming years. So
Yeah. Antonio, we had a discussion a while ago when we first met, and you explained me back then that you developed a tax control tower in your last multinational, or for your last multinational. And I was so attracted to that idea. I mean, it resonated so hard with me that I really thought it was a good idea to have that discussed here in front of the audience during this podcast. So let us go a bit into the details there around the concept of a tax control tower, why it is important to have one in place, what it means, what maybe recommendations, pitfalls are, and how to build one. So let's kick it off. Tell us a bit, like, tax control tower. What is it? How did you come up with the name? I like the name a lot, and I've never heard it before. I mean, I've heard control center, platforms, whatnot, but tax control tower, I think, because of the fact that it is a kind of a metaphor, I have an idea of what it is, and probably it's close to what you will tell me. But explain a bit for the audience the concept of it.
okay, so that is a great question because I don't have like a concept right now because it keeps evolving. So I've been discussing with a lot of people. So probably if you ask me the same question a couple of days, or next week, probably I'll have a different answer. But in a nutshell, this is a concept that I saw some global functions that I used to work right next to them on trying to use this concept of control towers to control the most important KPIs, to control costs, to control the deliverables from global procurement, global manufacturing, global quality. So this is something that I saw, like I said, those global functions a couple of years ago. And 3 years ago, when I took over the position to be the global head of indirect taxes, my first idea was to, first of all, I need to see the numbers. And at the time, I was talking about 26, 27 countries, and it was not so easy to bring the indirect tax numbers without asking the local finance or the local, tax teams over there. So what we did was to try to find a way to bring that information or to bring those numbers from the ERPs in a touchless way, and to have a big consolidation of that in a way that we on a monthly basis could see the tax positions for all the countries that we used to have operations. We were really lucky, and I would say in 6 to 7 months we were able to bring the indirect tax numbers. So I was talking one about the numbers and in some cases the payments, because we could tie in the numbers with the payments. And when we saw that we were able to bring the VAT, sales tax, GST, we took the decision to see if we could expand and get all the other taxes. It took us more than 1 year, but we were able to, for most of the countries, I would say Americas and Europe, we were able to bring not only the indirect tax information, but also corporate taxes, payroll taxes, other small green taxes. So when we saw that, that dashboard, I said, okay, we cannot go to the organization and say that we have a dashboard. So I was combining the concept from 5 years ago, the control towers, with tax numbers. So, I came up with tax control tower, and it was really good because it was a good way to sell internally, what we were doing. And, that was the beginning of the journey on the tax control towers.
And tell us a bit. So you saw that other departments, global functions, they had such a control tower. You said this could be a good idea for tax as well. You started with indirect tax, and then what happened? How did you get started? How did you approach this as a project? What were the first steps? Did you go to the CFO, to the global head of tax? Explain a bit like the first steps that you took and how it all evolved then.
Yeah, I would say when we were able to present the indirect tax numbers to the global head of tax, she said, okay, if you can expand that, would be great, and that was our idea. So we got the first buy-in, and as soon as we got this buy-in, we had to find out within the company who was responsible for each one of the taxes that we were looking for.
Yeah.
I'll give an example. In some global organizations, tax is responsible for corporate tax, customs, indirect taxes, TP, and
Yeah.
everything else. That was not our situation. So what we had to do was to work with accounting, work with all the other finance functions to, first of all, to map all the taxes that we were paying at the local level, to see how we could bring this information from the local ERPs to our data lake, and after to our global dashboard that we call Tax Control Tower. And it was a journey. So at the beginning, it was not so easy because, for some countries it was easy to get information. For some countries, we could not have like a great buy-in from the local teams, or they were pretty busy with different projects. So
And what did you do to get them to buy-in? Because this is very interesting, and we hear this in many different processes or different types of context, that getting the buy-in to obtain data, to obtain information is difficult. How did you deal with that in your project to build the control tower? How did you motivate them to collaborate with you and build together the control tower and feed the data into it?
first of all, we said that was because of the governance that we were trying to put in place, that was a must-have, because without having a full visibility, it's hard to say that you have everything under control.
Yeah.
And the second one, we were planning to have the total tax contribution reports. Probably you saw big companies like Shell, like BP,
Yeah.
they do have that. So we were thinking that if we were able to bring the information without asking any Excel files, or without asking the local teams to provide a lot of information, I mean, getting at everything from the ERP, that will be make us ready for, I don't know, one year or 2 years from now, to consolidate the information, to have the validation because the numbers were coming from the ERPs, and to be ready to publish a tax total contribution report like big companies they have been doing.
So you saw your control tower as a first step, an internal step to then evolving into a total tax contribution report. Is that correct?
Yes, that was the what we used at the sales pitch, let's say, to get the buy-in from the other finance organizations or the finance functions.
And then you said you started with indirect tax first. Is this because you are an indirect tax expert, and this is because you were the one that coined the idea of building it, or was there another reason why to get started with indirect tax first? Let me phrase it differently. If people in the audience want to build their own tax control tower, do they need to get started with indirect tax first, or can there be other tax domains that come first?
They could start with all the taxes. I started with the indirect tax because I was leading the indirect tax organization, and I was doing a POC, a proof of concept, with the taxes that they were under my area, I would say. But this is something that, considering what we did, my recommendation is you could start with all the taxes, but don't go at the global basis. Try to get like the countries where you have more operations. Make sure that you get all the taxes from that country and move to the next one, because
Yeah.
at least in our case, when we were trying to go from indirect taxes to total taxes, it took us a little bit to make sure that all the countries and all the zones, they had the capacity and they had like people to support us, because again, it was not so easy to find out all the taxes within the ERPs or within the financials for each one of the countries.
Right. So you select a tax domain, you select a couple of countries, you start with a POC. Tell us a bit, like, if you talk about the KPIs or the metrics that you want to track, give us some examples of things that you have top of mind, indirect tax wise, but maybe also for the others. Or is it per domain always the same set of KPIs and metrics, or are they different across the different tax domains? Explain us a
Now,
bit.
I mean, right now I'm phasing out the tax control tower concept in three phases. The
Yeah.
first one is what we did, getting the numbers, the hard numbers. So when you are able to pull all the data from all the taxes, and especially if you are able to go back 2 3 years, you are going to have the dashboards with the full information, and you can use that to kind of make sense or make sure that the numbers are, following the business at the local level. So you can
Yeah.
use the trends or you can use the past information to double check if something is not an outlier or off
Yeah.
what you're expecting. The second step for me would be to be able to not only get the numbers like phase one, but also be able to control the filings and the numbers that you have in the filings. Because in some countries or in some instances, maybe for one or two countries, the numbers provided in the filing, they were different from the ERP, and it's going to take some time to kind of reconcile the numbers and make sure that they tie in. So if you're able to control the numbers, and if you're able to put a strong process in place to have the workflow for the filings or the returns, and on top of that, have the full visibility if the local teams are filing the returns on the right dates, that will be the step two on the tax control tower. So for
Yeah.
me, if you do it, you bring the numbers information so you can use the info to double check or to spot any outliers, and you can make sure that the filings are doing or they are being filed at the right time. So as soon as you have step one, step two, for me, step three would be to bring AI to compare the information, to double check if they match. And if they match, it's perfect. At least you can say that you are almost in full compliance. If they don't match, you need to adjust the numbers.
So, Antonio, you said like there are three phases. The first phase is sourcing from the source systems like ERP the data which is reported. So that's the first set. Then the second stage is looking at the returns itself that have been filed and get them gathered in the second stage. And then the third stage is do kind of reconciliation between the data from one coming from the ERPs, the source system, with the data in the returns itself, do consistency checks and see whether there are no errors and then apply more AI analytics on top of it. Is that a good summary of the different stages?
It's really spot on. You got it.
Can we go to the different stages then itself? So for the first one, I think indirect tax wise, you will find most of it a lot in ERP. But for the other domains, say for example corporate income tax, what are other source systems that you can source from or from?
We got from the ERPs as well. So we were able to find out the tax codes and we brought the same information. So at least the control towers that we built, 100% of the information was sourced from the local ERPs.
And anything in with respect to specific local or environmental taxes, those as well, the data you wanted to have also from the ERPs?
We got from the ERPs as well, especially in
Yeah.
Europe. The only tax that we were not able to pull the information was customs. Customs and duties, we were not able, at least on the SAP that we were trying to get information, we could not find a good source of information to bring this automatically.
All right. And then, so in the second stage, when you look at the returns itself, how do you, let's say, capture the data which is in the returns Do you have any specific strategies? Because it can live in many forms, in maybe an IXBRL or an XBRL, a PDF. How do you capture the data which lives in the return?
Yeah, this was the phase two that I was not able to implement. But at least from the indirect tax perspective, our goal was to get all the returns in a shared drive or in one drive, and
Yeah,
bring some technology to be able to read it one and to compare with
right.
the numbers. So from my perspective, for the indirect tax piece, it's not a rocket science. For the other taxes, I need to find a way because we were not able to go to that stage.
Yeah, although if you can do it for indirect tax, the same is equally applicable for all the others. And yeah, there are many ways of doing that. There are intelligent document processing ways for making sure that you can train LLMs, for example, that can read documents, classify them, and extract the data points. Okay, makes
Yeah.
perfect sense. And then you
We
have
were
the
trying to
third.
use OCR technology. I guess that is
Yeah,
the name of, yeah.
yeah.
So that was what we were planning to do for indirect taxes.
And then your third stage is comparing the data from the source system with the data from the returns. And then you said do consistency checks. Any other things you would check? Is it purely consistency, or is it also like aggregating and come up with total values for certain of the metrics, tax, cash paid, and just one example, amount of returns filed? Or are there also like trend analysis? What are the specific ways in which you would unlock intelligence from all of the data that you now have at your fingertips in the control tower? Can you elaborate a bit?
That is a good question. At the beginning, the idea was to use that to compare with the trends, or if we're able to bring some information from manufacturing, from procurement, from production, and even from sales, I would say we will have all the information needed to a kind of forecast what is going to be the taxes.
Mm.
But for
Yep.
for the indirect tax piece, I guess it's simpler. For the other taxes, I guess I would need to invest a little bit more time to really understand all the drivers, all the possibilities. But I'm pretty sure that it's not so hard to come up with good insights if you combine the payments, the data, the returns, and AI, and bring together all the possibilities.
Yeah. So you refer to consistency checks, but also then to forecasting possibilities. That makes then that probably the users of the value of the control tower, it goes beyond the tax function itself. How was that in your company? Who was using the control tower as a functionality? Was it only tax, or was it also, let's say, treasury for forecasting, or the CFO for cash evolution insights? Can you elaborate a bit?
Sure. At the beginning, it was the tax organization because we were building to have the visibility for the tax organization. But in my mind, it was always a tool for the finance organization, not only for tax, but like you said, FP&A or even treasury, they can use that to kind of know the information. Because by the end of the day, if everything is right, you have a single source of truth, and that should be all the payments for the organization. So should
Yeah.
be an information available for especially for the finance functions, but if need be for the full company.
And so you were obviously working in one of the biggest multinationals out there, but say that tomorrow you become a head of tax in a mid-corp with a data maturity, which is probably much lower than what were used to have in large multinationals that you worked for. Um, let's restart your story again, building a tax control tower, but now from a perspective where you don't have that many means, you are limited in resources, probably it's more difficult to get the data. What would you do to get started? What are the first things? And I know it's all hypothetical, so we need to imagine a lot of the things,
Yeah,
but imagine a lot of constraints. Imagine data which is all over the place. Imagine also local finance, which is completely swamped and probably is not very available to help you out. Like, let's take a couple of steps back. What would you do to get started?
that's a great question. Amazing question. Thank you for that. I would say, from my perspective, if you need to start, let's start small, but in countries that you believe you are going to get information. So again, you can have the proof of concept. So if you are targeting those countries, I don't think it's like a really hard exercise to combine 10, 20 payments per month. Of
Mhm.
course, like you said, the finance organization could give you a pushback, or even the local tax organization does not have the time to do it. But if if you start small and start showing the value and start showing, how that could bring visibility, governance, and support more functions than tax, I mean, finance or FP&A or treasury, I guess that is a good start, because you can at least try to start small to show what you can do and move forward for the next markets or the next countries.
And would you still start in the indirect tax space, or would you pick any other of the tax domains?
I would say if you go manual, you could go through all the taxes, because again, you're talking about, I don't know, 10, 20 payments per month, I believe. So
Yeah.
again, I don't like that, because it's a manual process, is Excel based. You need probably people to consolidate that. But if there is a need for that, I would start small. I would start in the manual way. I will show the value, and moving forward, if the company is willing to invest not only money but also time, because sometimes takes less time to consolidate on Excel than to prepare the ERPs or to prepare the information to be ingested in a data lake, and after to move to global dashboard.
Yeah. And so, what are some of the metrics that, now that you are the head of tax in a mid-corp, and the overall maturity, and let's say, maybe the overall digitalization degree is lower than what you used to see, what would be the metrics you would be focusing on first? Like, what would be like the first values that you want to get from the control towers? Or maybe put it differently, the first problems that you want to solve, would you still go after, like, the cash tax that is paid, the amount of filings you are doing, or rather do the reconciliations between what you have in the books and what you have in the returns? Any ideas there? Because again, I think there is a very big difference between, like, the very mature companies out there where you have worked for, but then also there is a very large group of companies that is on their journey to get there, but maybe
Yeah.
has a very different set of resources that they need to get started with.
Yeah, no, you're touching a point that I was going to talk later, but for me, digitalization is something that is changing a lot the tax environment.
Mhm.
So this could be a good reason to start in these not so big companies, because in a couple of years, especially in Europe, the tax authorities will have all the information, because we are going to have invoicing, filing, and all the e-reportings like we have in Brazil. So if the companies or the tax departments, they are not able to see the information that they're providing to the tax authorities, they will have a hard time to explain some issues, because by the end of the day, the tax authorities, if they have the technology, and I could see that some tax authorities, they're investing heavily in AI, in digitalization, and in all the tools that they may have to facilitate their lives, they'll have the information, or they will spot issues before the tax department. And I don't think that is a nice position to be. So that could be a good sales pitch, if you say that considering the digitalization, we must have this technology, this know-how, or those skills in-house to make sure that at least as soon as we file, we can see what's being filed. Because if you think about the tax professionals from the old times, they used to work a lot with Excel, but right now most of the information that the taxpayers, they are providing to the tax authorities, they are XML, and it's not so easy to read that. So you need to have tools to kind of bring the information that is being provided to the tax authorities in a way that the tax organization or even the finance organization, they can really see the info that was provided.
Yeah, no, makes sense. What? So I imagine, when you built your tax control tower, that you had a team or colleagues or experts that were there to help you out. Were there internal experts, or was it outsourced to consultants that would build it for you, like IT consultants?
It was half internal, half IT consultants. Yeah, we brought like data engineers to help us to find out the information.
If you would now take the position that you don't have that team available, and that it's just you and maybe one person in your tax team, what would you recommend to get started? Would you then still would you go for the spreadsheet approach, an Excel, and then build some dashboards on top of that? Or is there any specific tools that you have seen out there that can be used? What is your view there? Again, assuming resources which are too restricted, too limited, budgets which are maybe not there, like the minimal viable tax control tower that could be built?
Yeah, I would start with the Excel files or with the Excel process, even though that I don't like it, but just to share some fun fact. On the global organizations, like back 5 years ago, when we started with this concept of control towers, we started with post-its on the wall with red, green, or yellow. So that was everybody was laughing at the time, but was the way that we showed to the organization that we need to track KPIs, we need to track what is going on at the local level, because if the global organization does not have even visibility, it's tough to really trust on the ways of working, on the process in place. So for me, I know that this is not mainstream. I see a lot of people with different perspectives, but for me, first is visibility. If you don't have the visibility and you cannot compare with like the last year or the last years, it's tough to kind of guarantee that you're not missing anything. So I would always start with visibility, even though if we need to start with Excel files that I don't like, but it's really old style, old school, but I would prefer to have at least a visibility than being blind.
And would you then just on a monthly basis reach out to the different stakeholders in the organization, gather the data point in the Excel, and on the back of that aggregate? I mean, you consolidate everything in your Excel and have some dashboards on top of it. That's what you're saying, right?
Yeah, I would say that. And I mean, most of the finance organizations, they keep doing that. So I guess one of the reasons that Microsoft is growing so fast is because it's really hard to replace Excel, even though that everybody would like to replace that.
Yeah. All right, cool. Yeah, I think I have a bit of a better view now on the definition and the value of a tax control tower. I think it's fair to say that it is still something that can be elaborated in different directions. Also, probably depending on your industry, on your data maturity, you will focus or prioritize one tax domain over the other. So you in your case prioritized indirect tax, but it can be that there are reasons that you prioritize corporate income tax, even like very industry specific taxes, like, I don't know, plastic tax or whatever. So in the end, everything is possible. But to summarize a bit what you said, like, it's important that you select a tax domain for which you want to do it, a couple of countries, go for a POC as soon as possible, can even be spreadsheet based, and then work towards the metrics that you want to track, make it happen so that you have those calculated, and on the back of that you can then expand with maybe always the icing on the cake, or the ultimate goal being the total tax contribution report, which eventually can be shared with external parties as well, right?
Yeah, that is the idea. And I believe all the media and the big companies, they'll have to publish the total tax contribution reports. So I bet you that in a couple of years, the transparency will be totally different. So most of the companies, they'll have to find a way, small or medium, they'll have to find a way to gather this information, to consolidate it, and to make sure that they are publishing the right numbers. Again, I don't like the Excel process, but if need be, we need to start with something. And I mean, most of the tax organizations, they used to do that like 10 years ago, right? They used to have like, at least at the country level, I guess they used to have some type of consolidations to have the proper discussions with the CFOs and with the finance organization. So
Yeah.
it was something that I used to do a couple of years ago on Excel. I was lucky because we were able to find ways to bring this information from the source system. And now I'm thinking about step 2, step 3, and everything that is coming.
All right. Cool. I think that was very interesting and hopefully inspiring for the audience. I have a final question for you, Antonio, which I like to ask all of the guests on the podcast, which is the following. What's one piece of advice, one recommendation that you would want to give to the audience, to aspiring tax professionals, to get the most out of their career, to excel in their tax career? What is your golden piece of advice that you want to share?
Only one.
Only one? No, it can be two, but ideally one. The most important one first, please.
Yeah, I would say the first one is always be curious and willing to learn new skills. This is a must-have, especially considering all the changes on the new taxes that are coming or the new tax global landscape. So
Yeah.
always willing to to learn new skills. The second one that I like a lot is always seek for feedback, not only from your managers, not only from your peers, but also if you have a mentor, always try to get a feedback because good or bad, it's going to help you to grow. So that is for me really important, and this is something that I've been doing for my career.
All right.
And can I
Super.
have one more for the
Sure.
in-house? For the in-house tax professionals, I would say work outside the tax department, leave the tax cave, and break the silos and talk to accounting, treasury, procurement, sales. It's really unbelievable how much information you can get and how much that can help you to understand better the organization that you are working for.
All right, fantastic. I
All
think
right.
that's super helpful, super valuable for the audience. So, with this, Antonio, I want to thank you for the great conversation, the great elaboration and clarification around tax control tower and the value it brings. And then, yeah, let's stay in touch. I'm very
Let's do it.
sure that the tax world is small, so we will meet again anytime soon.